Hi, is everyone there? Hopefully this volume is a lot better today. So, tricky week for me because I've not been around that much. So, hopefully you guys will help me out and give me lots of questions and opinions on what you think has been going on. We've had a lot of chatter today about slippage, which hopefully everyone is aware of, helping you to trade around the opens a lot better. Took to V. So, who is that? Who is Took to V? Boom, boom, boom. Let me just check. Hi. So, were you at what when you talk about free challenges? What are you talking about? Hello, Julius Sharku. So, Took to V. What we're talking about with free challenges? What's that? You applied to test your skill. These are a lot of questions that aren't really about markets, are they? They're about the workings of Alpha Capital. They're all available on public chat with the mods or in the frequently asked questions. Maximum capital is 400. You can have 300 in any one strategy. I'm not quite sure what you're going on about. With you applied to test your skill, 100,000. No, that sounds like a question for the public chat or a support ticket. So, what are you all looking at playing? You've just had PPI. Has that caused any issues for anyone? Um, so PPI just came in strong on the headlines on the call. There's a couple of little revisions up, but I don't think we need to get as worried as maybe the market's first reaction suggested, because it's all hidden away in some weird stuff. So just like the CPI, the broad-based figures and the ones that go into PCE are pretty benign, pretty flat, not any real issues. What we do have, though, as I wrote on my chat, it was trade services. I don't really ever remember talking about this at any point ever before. That was at 1.9% and is most of the move on PPI today. Within that, trade of private capital equipment up 3.6, trade of government purchased capital up 3.5. So I think a lot of that will be explained away on some funny with government purchasing by the look of it. But we can have a quick look at what I'm talking about. If you just look at the actual release, which is boom, boom, boom. Where is it? Yeah, so I mean, the initial reaction is, PPI is the inputs, remember, on the profit side. It's also some of them inputs into the Fed's inflation PCE. None of those are really a problem. As usual, people trading the headline. But if you look over here, that's what I've just been talking about, table one of the actual release, and obviously it came in at spot two, seasonally adjusted for month up to spot six, unadjusted. But if you cut, the first thing to do is go to the end line, and you go through and have a look. What are the big figures? And straight away you see trade services here at 1.9. Within that, it's trade of finished goods up to, which is the issue. And then, like I say, private capital equipment 3.6, trade of government purchased capital equipment 3.5. But outside that, there's no real biggies anywhere. We've still got deflation in the transport side, which we've been waiting for. These are all fairly flat. We want to get down to look at the ex-energy ones anyway. And the issues have all been in services prior to that. So it's non-manufacturing coming through there. I'm telling you, that means it's service industry. Yeah, unprocessed energy. There's nothing really in the things that we're looking for in any of that. Let's see. There you go. So you can the next one, the table 2, gives you much more granularity, as they call it. So you can see the actual underlying. Not really bothered about goods. There's nothing going on there. So what was it within that machinery and vehicle wholesale stuff? So you can see these are reversals from negatives last one. So this is where the revision has come from as well. So it's all contained within the same area. Uh, and there, look, this is a volatile one at the best of times. Computer hardware, software, and supplies. That wasn't really in that other number we looked at. So no, nothing that's scaring me particularly there. And all these motor parts and aircraft parts, look, ages ago they were running at a much higher rate. A few months ago, they were really flat now. And often we get this problem with securities brokerage uh, commissions, portfolio management. So they had a little bounce up again. Markets have been going to all-time highs again. So not surprising that that is coming through, but that, as it shows here, look, they are volatile. They're not always in a straight line. So yeah, I mean that's enough for that. I think we've net. I think that is going to be read through as being okay. It's not going to disrupt what we've seen for the data of the last week or so, which is demand destruction potentially, with the services PMI and the manufacturing being both negative, both declining in retraction, uh, and obviously jobs underneath not being good. And they've got inflation data across the board pretty much flat. So that's quite good. Quite a nice mix. Nice and loud, yes. You might have to adjust the other way. Thanks, Julie. All right, where are we? So a lot of stuff I put on that little meme today, all about Biden being very similar to Ronald Reagan in the 80s. Quite old, started losing his marbles, spitting image, started taking the mickey. It's all very funny, apart from it isn't. And how the hell did he? This is his first opportunity of being unscripted to show the world, and he's come out with calling his running mate Trump and calling Zelensky Putin. I mean, obviously, if you watch that, he recovered quickly, but the damage is done, and he's left in a situation now where surely you expect him to perform properly, and he gets no upside from that. And if he messes up, then it's just a disaster. That's going to keep causing yield spikes. The Trump base case is inflation, how the market is reading it, and the fiscal largesse that comes with that. So that will keep causing his little blips of rates pushing out and just holding back the risk on. That can sort itself out in the indices a little bit, but in general, it's going to hurt the currencies in terms of dollar strength in the main. So we'd like to see that settle down, but there are now 17 Democrats, senior Democrats, calling for him to go. You'd like to think that somebody would be brave enough to tell him. It's not just, they wouldn't even make the election without deteriorating quickly into November. Never mind another 4 years. It just seems untenable, doesn't it? I know the media machine of Trump is going to lean on it 100%, but I think the Democrats have got to do something, and that would possibly give the bond market a little short-term lift. Yesterday, I wasn't around, but obviously looking at what went on, the CPI was good. Underneath, we had rents beginning to just crack. They've been stuck at spot 4% positives every month. We're waiting for this lagged effect of the real-time rents to come out of it. Keep going on about it. So hopefully that's the first sign they're beginning to come through, and that obviously reads through nicely. I think it was the lowest headline for 2 or 3 years on the core, so it is going the right way. It's just how much of that is priced in now, or is it like it's happened? So Goolsby and Daly both came out quite on their typical dovish side. Goolsby really going for it, saying that is exactly what it looks like for the 2% path, and Daly saying that very much looks like the mechanics to make a cut. So September has gone fully priced. It's going to wobble a little bit around that PPI figure, but I think we'll end up settling back on September. So that will be net supportive in the background. But as we'll discuss now, the dollar, which obviously has started breaking down and carrying on with these ones and twos that we've been following. So pretty much like this chart that we've been looking at for a few weeks, we've done the 1, 2, 1, 2, 1, 2. We're into these smaller waves here still, but they're still doing impulsive moves down. Net direction of travel is nearer vertical than sideways. Lots of these impulsive bits down, and then you get consolidations. Looks like we're in another one at the moment. That could possibly put in a higher high for that. Good double correction. It's all about this 104 level. We've just struggled to break it for the last few months. Hopefully the net. Yeah, so that's exactly what I'm saying, Ben. Good to see you. Good comment. It has brushed off the hot PPI because of the reasons we've just discussed. Hopefully you were watching that because it's in the wrong areas, or it's in the right areas if we believe that PPI is going to stay benign. There's nothing that feeds PCE a real problem. We've had a small jump back in the portfolio services. That does feed in. But I think overall, they're all going to be pretty much in line. They'll focus that. They'll factor that in. PCE might have a small jump back. We will have a look at NASDAQ as we go through. I just want to do the dollar and stuff first. So we look like we're still in this pattern. That's a 1 of 5 of those double bracket blacks. So micro waves. Anyone that follows what I do, it's subwaves, waves within waves, fractals. So these are the small intraday movement ones. Net, we're in a bunch of 1, 2, 1, 2, 1, 2. Soon we should have a group of threes, the ones where it makes a lot of progress, unless something turns its round. But it does look like we've broken the back of it now. I'd like to see this 104 really give way. So overall, the pressure for that dollar is still a two-way pull on the fundamentals. We just have to be aware of that. So things that could, make it reverse and have them finished an impulse of a reasonable degree, which would put in a decent bound. It's this Goldilocks thing in the background. Some people are still saying, do we actually need to cut rates? We've still got growth bobbing along, got inflation falling back. Is this a complete repeat of the 90s? In which case, that's a Greenspan extra step of effectively putting rates on because he thought that there was, cutting rates because he thought that there was a lot of problems to come, and it ended up having to reverse it all. No, sorry, I'm completely wrong around that. He thought there'd be inflation coming through, and it wasn't. It ended up being a Goldilocks economy, so they ended up cutting rates, which just gave another boost to the market. So we could potentially be in that situation, which a number of people are worried about. But I do think they're going to have to take the insurance just in case. The data net is suggesting that they need to. Powell is dovish. Goolsby Daly are prominent voting members, and as I said before, the majority of the members in the current FOMC makeup are dovish, so they don't need much of an excuse to do it. Yeah, I mean, a lot of these things, we discussed it on Monday of how they're all stacking up for sideways movement, which would potentially move on the CPI, dollar sell-off, blah, blah, blah. But it may well just get extended a little bit. So Times Square, is the square bit about the number of times you're going to post the same thing? It's I've got absolutely zero to do with accounts. If you could go on to support tickets or the public chat, I'm sure they'd love to help you. And well done for passing, by the way. So Goldilocks is a reason why rates may stay high for longer. JP Morgan reported we've got the start of the proper earnings season today. This is the banks. JP Morgan, Wells Fargo. In fact, we'll have a look at Citi in a minute. Can't remember what they did. But net interest margins, which is the thing that most people look for, they were okay at JP and worse than expected at Wells Fargo. So Wells were selling off, but people want to know what Demon had got to say. Just have to keep trying it. I think if you look at what George said on the announcements, there is a backup of things because of we need to hire a few people. They've asked for patience. I'm asking for patience. If you mention it once more, I will show you that I've lost my patience. Please chase whoever you've chosen to do so. Go into public chat. Alex is back. Send him a message. So JP Morgan, Demon is saying it could be higher for longer and that there are inflationary things in the background later in the year that might just temper the amount of rate cuts. We just discussed Trump and Biden. That can create this inflationary spike and hold up in the dollar and respective pairs. Jobless claims, obviously knee-jerk yesterday, offsetting some of the CPI. It was a lower number. But remember, it's such a volatile series. Watching it from week to week is no good. You need to look at the 3-month trend, 6-month trend of jobless claims, and that is downwards. Sorry, it is upwards. So be careful reading too much into any one print. They get revised each week, etc. Now, the deficit has been an issue for just outright growing all the time. But last night, the budget deficit came in slightly above, still negative for the period, but less than the expectation. That is actually on the margin dollar positive, I suppose. You've got, we said, all the Fed is biased that way, just like JP Morgan on the banking side, and they have actually upped some of their provisions for consumer loan losses. They just need to be aware of that. But Pepsi, Delta Airlines all saying that they're seeing decent signs of okay demand and lack of, and the inflation pressures beginning to disappear. But you've got the intervention as well. So very cleverly, we've talked about them doing it before, but every time there's bad US data, then they jump in and lead on the back of that and start buying some yen and selling dollars. There's every chance they keep doing that. They did 22 billion yesterday. So it must be up to close to that 100 billion mark that I talked about being the yearly increase in their exposure to their large debt if they were to put rates up to 1%. But sooner or later, the penny might drop. Anyway, they've now set their stall out. They need to make sure they deliver something on July the 31st. Otherwise, all this buying, all it would have done is just invite the speculators on to have better entry prices. But if they do get it together, then there's still potential for 10 to 15 yen of sell-off. Cyrox, where's Alex's number? We were talking about this yesterday of how crazy the guy is, isn't he, to have given 80,000 people his number to start with. He's lost that phone. Does anyone here actually have announcements set up on Alpha Capital Group? There has been some poor communication by Alpha in recent months. The last 2 weeks, the communication is brilliant. You're getting lots of information from George, various other members. Alex has been away. He's told you that he's back. He's even given you a 30% special off for his return. And yet here we are, people wanting to moan him down. He'll give you his number when he wants to. He's still available and answers everybody on his ACG, Alex at Alpha Capital Group.
Okay, what would you like to add?
Yeah, Alexa's even trying to get involved now. So please just go through that, go through the chat. He'll come back to you, direct message him, put stuff on public chat. Really don't want non-market stuff on here if you can avoid it, please. I'm sounding pissed off because basically I am, and I want it to stop. I'm fed up with the people coming on to me on direct messages. Alex might not say it. I'm fed up of it. People begging, crying. People who've won, are about to be awarded free accounts, moaning where they are, despite the fact I told you Alex is covering it. Please stop it, everyone. Hi, Fato. It has been quite a week, hasn't it, in the markets? Good. People want to talk about markets. Love to hear from you. Brilliant. Notes changing, voice tone. So again, September rate cut is supposedly baked in. We can have a look at that on a CME tool, which may not have updated for that. That's PPI. Ashley Garlic, yeah, we'll cover that in a minute. It's a good point. And we'll talk about what happened. We've been making this reference to halitosis, bad breath, play on bad breath, etc. Yesterday, we had the first we had the first real signs of what I've been talking about, in the fact that you had 400 of the 500 stocks were positive yesterday. The indices was off because the heavyweights were seeing some rotation. What's always a classic in indices is value plays, when the sensitivity to growth is obviously there with the large tech stocks. And sometimes they do play like bond proxies on interest rates. But what really does like to move is the small cap end of things. They're really geared to bank loans, etc. Any signs that the rate cycle of cutting was to start is the reason. So obviously Russell up 3% yesterday, Nasdaq and S&P off was the classic early signs of that. We'll see whether that carries on for a few sessions or whether it's just a big jerk. But yeah, over here, July, it's only a 5% chance of there being any rate move at the next meeting. It's pretty much baked in there won't be, but the rhetoric and the post-meeting should start moving us in the right direction. and it's September, which, as you can see, that was there wasn't anything like that earlier, I don't think. So that is, yeah, the likelihood of a bigger rate cut has been falling slightly over the month, but we've really tightened up on there, almost being a full-on expectation. 98% chance of there being an easing of some point in September now. Boom, boom, boom. November, I've gone on about it a few times. If you're new to it, the November meeting comes 2 days or starts the day after, and we get the result 2 days after the election. That won't stop them at all about being political. It comes after the event. So that's one cut of 25 basis points. That one is there to be two, which is running at 96.6% chance of there being two rate cuts by November meeting. Again, 99% chance of them have started easing by then. So it's all massively baking back in again. And then December, look, nearly 50% chance of there being a third rate cut. The one thing we've got to watch out for is here, if as we've talked about, they're behind the curve, they have to go bigger, and all those things might change because they might be doing a 50 bips at some point. But at the moment, I think they'll try and do it in this kind of orderly fashion if they can, the 25s. Boom. So have a look. So you're trading Nasdaq on the short time frames, are you? Okay. Any questions on how that CME tool works? I know a few people use it. Does everyone check that? Heck, Sorin, is that a theoretical question? You just need to trade within the rules to get paid. So follow the news rules, particularly the average timing 2 minutes, blah blah blah. Try not to take advantage of unrealistic price points. Now, obviously, we talked about this earlier in my chat. We asked a question of some people thinking that we've moved demo accounts to live accounts. We've moved the experience to a live experience. So if you trade around in large lot size, thinking that you're an absolute god of the world and you've been getting away with it, then you're now going to see what large lot stop losses and target prices look like when you try and exit and enter, which is look at the depth of market that you can access. And in the real world where I came from, if someone asks you a price and size, as they call it, then you adjust the price relative to how big it is. You give people an option to do a small, sensible amount to start the order, or you price it out accordingly. And that is what you'll be getting as your fills going forward. It'll be at an average rate. And if anyone has any issues with it, go on to support and they can show you exactly how your target price or stop loss fill was created. So please take advantage of that. I mean, heck, have you done any of these before? If you want to go and ask on public chat or in my chat, people will help you. But it's not something that I want to spend all day talking about on here. But yeah, definitely go on my chat. There's loads of people with experience. They will definitely help you. Michelle Koo, hi Planty, happy Friday. Thank you for your input this week. It's been a positive one. Well done. Good stuff. What did you back? What did you go for? Boom, 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 boom. Scalping the gold. Yeah, well, the underlying trend carried on, didn't it? The real rates trade is literally what the fundamental is, plus people getting squeezed. So good stuff. Get through those phase twos. So let's have a look. Let's try and do some catch up on the charts. Come on. Oh, well done, Michelle. Good stuff. So that's $1 again. We looked at that a minute ago. So it looks like it has put in that low. We need to take this one out and go below 104. So it could be in a short-term consolidation with that PPI, etc., etc. But net, whenever this happens to go and tops out, then we should have an impulsive, bigger move down. Goal setup at the start of the week was that we thought we were nesting and moving up, and that seemed to be the case. We actually had that as a potential end for wave 2. It put in an extra consolidation and sell-off, and then we've put in 5 waves up to last night's little spike out and consolidated into today. And that's possibly done enough with that wick down. It hasn't come back into this zone yet. I'm expecting that to hold as some form of support. So we could mess around here and put in what would be a double extension to put the second wave in, but make no mistake, we're in the pattern in these subwaves to come up here, take out the all-time high over there, and we're trying to make our way up in this channel. We discussed this on Monday, all about the various fib waves it should be for getting us up to this eventual topping out bit. So stop losses, I think, with that previous one high over there, 23.85 is where it can start to get interesting for something else. But it can go all the way back down to this second low here and not be a problem. So we're just consolidating the gains for the minute. I don't think the PPI is enough to disrupt that more than just a little bit of short-term profit taking. Chang Chu, why did Nasdaq move heavier than Dow Jones yesterday? Well, again, it was what happens sometimes when you've got big institutional money on the side waiting for signals. A lot of them are slightly worried about the disconnect between where the heavyweight stocks are, 7 to 10 stocks doing the majority of the positive performance in Nasdaq and S&P. A lot of people have been waiting for an excuse to do the breadth trade, which is literally buying the lower market caps and selling the heavier market cap weights, which means you get that rotation. So, as we said earlier, 400 stocks in the S&P were up, yet the index was down 1%, which is showing you that the internal weighting of it wrong. People were looking to switch into the oversold, flat to down here small cap stocks. They tend to outperform in periods where the interest rate cycle is starting, interest rate cutting cycle, etc., etc. So, and we've been talking about it. We're very close to a wave 5 top. We're either putting in a little bit more sideways and then breaking out, or we might just eke it out at the moment and then put in a bigger one. But we've talked about it. There's every reason why you could create a scenario why the Nasdaq and S&P need to consolidate. The breadth has been poor. The advanced declines in general have been poor. And we highlighted it in advance so that everyone would know that it's highly likely that the index may see that breadth and dispersion improve, but see the overall index come off just because of the makeup of the weights. So more than ever now, you need to keep an eye on those Mag 7 stocks intraday to have a feel for what's going on, not just a blind buy of the index. Obviously, Tesla had the robo taxi problem, didn't it? The first Nvidia sell note came out, or going back to neutral at least. TSMC, who is the sole supplier to Apple and Nvidia for their high-end chips, had record results and started making noises about they think they've got some pricing power short term. What that means is they're going to start charging Nvidia and Apple a little bit more, taking advantage of it, and they've told people that anyone else wants to get involved, and there's a big backlog. So that's just enough to make people start to question whether Nvidia will have some form of profit slowdown, et cetera, et cetera. Where is it? Spin that one. Which index is that, Quang Tu? Do you think the Nasdaq might consolidate for the next 10 years? I'd be surprised if it did. I think it's a real toss-up, the setup, as to whether it's all-time multi-decade highs or whether we're at the start of a secular bull market. Why do we think that? Well, regardless of the performance of the big tech stocks, obviously the periods of consolidation will be what we've just described. Then what we're looking at is what happened in the 90s with a potential productivity boom ahead. Often that isn't necessarily the first move of stocks, but and things like Nvidia possibly will hang on. But if you're going to improve the productivity, then it also means that you don't have to necessarily smash the interest rates down very much, and you can start growing out of some of the fiscal problems a little bit. That's what the Americans are hoping is going to happen, in which case, the next time you get a proper 10 to 20% sell-off, you should be buying it. VJ, you're dead right, and it's Alex is back, and it is a question from me. We've got this new media team, which we've talked about, and they're very good. So hopefully we'll bring that back to life, but it got sidetracked just with some internal issues. So yeah, it is planned. I'll be at the forefront of that, and we will make it happen at some point. Sorry for the delay. In the meantime, just come onto the chat and onto these and ask questions. We'll try and build it like that short term. How big of an impact has prelim consumer news? What do you mean by that? Are you talking about Michigan? So the Michigan is well followed. That is a decent survey. The 1 and 5 year inflation expectations have moved the market quite a bit of late, but under the other bit are consumer expectations, sentiment, and current conditions. So this will take in data from a few days ago. So the people asked the questions won't have seen the CPI data for sure. But they will have seen all the other ones. So I imagine they've been coming off record at least 30, 40-year lows on the sentiment side. So I'd like to think that people have been moving more towards thinking that the rate cuts are nearer. So you'd expect those things to bounce a little bit, which sometimes the bounce in consumer expectations is taken dollar positively, but I don't think it's going to be enough to massively derail here, because they should have the inflation expectations should be more or less where they were last time. It's a shame that they haven't. If the CPI would have been factored in, it would probably be a beat today on the downside, but probably not, just because of the timing of the data. A good question. Good question. Right, where were we? So, yeah, the interesting one, we talked about UJ, didn't we? So my setup for UJ was that we were moving up this blue path for the blue lines. We got to the third one. The way that I'd set these up is you need 2, 3, and 4 to really cement where 5 is going to be. So we can try and do that today. At the moment, we've put in a 3-swing movement with that really big intervention yesterday. We consolidated, and that now looks like a new low for the move at post PPI. So that's more or less telling us that we're going to probably do a double, which I've put in here as the grey forward, which takes us back down to that 155 where there was lots of big option activity before. So I would imagine that people are still sat there wanting to pick that up. So that could easily happen, but the spot 618 as well isn't a million miles away. I do still think that the Bank of Japan have got a lot of hard work to do to convince us that they're for real. At the moment, they're just spending money against the wall, as it were, with no concrete reason why that should stay. It's good that they've got the sentiment and they're rapidly looking to react, but they've got this period here up to the end of the month with the must be the Wednesday 31st is when they announce, I think. So right at the end of the month, they need to have done something concrete, more than just a few bips. We need to see closer to 50 bips to get the market back on side, because otherwise they're going to struggle to make people believe that things have really changed, in which case we've got that breakout. Yeah, that's all right. So that, to me, we haven't changed that 2, 3, 4, 5 for a while because it was playing out and we needed the 4 low. So this brings us a little bit further down. We talked about before, and there is rumor from Japanese institutions that 165 is the area that Japan would really do something and possibly would do a rate hike rather than just doing the intervention. So that all kind of sits for where the next rally would be, which would be an eking out a new higher high. All depends where this finishes. But at some point when this, I don't think this move is completely finished yet. This is an intermediate wave 4, probably decent scale. So UJ expecting one more go. So why is it so weak? Then obviously people are just reading through the fact that the dollar, the July rate cut is probably definitely out of the way. A little bit of argument. We may well be seeing people just take off their short for the weekend. And we are, like I said, we're in this mode where the consolidation it's still valid, even coming off another 1 or so yen, just in the current makeup. So I'm quite happy that it's playing out as we said, that it would be a consolidation. It would all depend on the data at the end of the week as to whether it became a double. We've had the double correction for that. Yes. And again, I think that whole structure has the potential to double down to here, but we'll keep an eye on it. I'd rather, in the short term, be picking up the UJ into weakness rather than outright selling it. I want to see better noises from the Bank of Japan as we head towards that meeting. Any other questions on UJ? I know the markets have just opened, so you may be caught up in all that. So I'm playing catch up because I've been away for most of this week from the markets. So it's time to see where we are on a lot of these things. Where were we on Monday? Yeah, so we're here, weren't we? We said we're just about to put a fifth wave in, and then where would it likely come back to? We thought it might hit the spot 382, but it's done 23.6, and on the bottom of that order block previously. And it's bounced nicely, so it's a case of where are we in this next phase? So we could have had just a consolidation, and still be in there. We're consolidating. I still think that we said on Monday, didn't we? We're just going to place that because we didn't want to come off the graph. So yeah, what have we got next week? All sorts. I'd anticipate this to either be a wider consolidation or it's the start of continued heights. So I would have 128.90s, 128.950 perhaps as a stop loss in here, so that you know that is definitely consolidation breaking. We might be going deeper. It feels like we're still in this impulsive ascent. If we're in the correct setup, then this is a third wave. It should be doing most of the work alongside that anticipated dollar sell-off. We need that dollar really to come. And then we need to find rhetoric in the UK. There was a small uptick, wasn't there, in GDP this week, but it was a mixed bag. The reason it didn't go uberly crazy was yesterday's data, wasn't it? Yeah, construction was surprisingly back positive. GDP was slightly better than expectation. Industrial production missed, manufacturing production missed, etc. What is interesting, index of services, that has had a high correlation with the UK CPI, core CPI level for the services, because it's beaten quite markedly recently, and then we've had this sticky services inflation. That's coming in line basically. So this might be good timing for the next Bank of England meeting, that the services inflation has the chance of being flatlined for the month there, in which case that might just be enough to get them to do a rate cut. I think that there will be, but at the moment, Fato, the interventions, the gearing up to just trying to do it around the noise they're going to make about what they're doing with government bond purchases, which should be almost finishing them, if not almost. And maybe a rate rise. I think the market expects them to do at least 15 to 25 bits. It'd be much more helpful if they did more, and that would be taken as an intervention effectively. And I think that would be the more sensible one to do. But what they're trying not to do is go too early just before inflation rolls over. They have got a tough job, so they're trying to factor in help from the US dollar, and the data is going the right way. And that's the reason why they are going every time US data is weak. So I'd suggest they're going to try and hold on to the end of the month. But if there's any what they deem to be dovish US data prints, then they'll keep buying the yen and seeing UJ come off. But I'm not convinced they're going to do that in any meaningful size. So it may be that, like I say, it's going to consolidate somewhere in this lower part of the grey box, somewhere in here down to around 1, and then go again. And that will happen if there is poor communication or just nothing happening. And if there's anything that makes the dollar bounce at all, I think you'll see a lot of near-term speculation. Okay, that's interesting. All right. We've got the same scenario with the euro, just like we discussed at the start of the week. And it's all about what labelling it is, where we are. We said we're in an impulsive position, potentially. So that could well still be the small level 3. The 4 is in here. We're in the 5, which again is a higher degree third within a third. So we should potentially, if it's going to happen, have some reasonable euro breakout to the upside to get to that 110 sort of level and beyond. So any consolidation here, and that could easily be just shallow there. All part of 5 to the upside, which is a 1. We'll get reasonable consolidation. So I think you get a few opportunities to buy in here. Have a bit of range trading, sort of 109, 110 and a half. But net, I think the direction of travel is up. We're going to have a dollar negative period. So it's coming home. It's coming home. I know you're all wanting them to win so desperately. So FTSE been trying to put in a little bit of positivity this week. We said again we've got the stop loss over here as a potential buy from the start of the week. Didn't take it out on Tuesday, so we've been eking up. Obviously, there's a lot of sectors. Of course, the general mood in the UK, these events, whenever we win something, is generally positive. If we do, watch out for just buys on the side. It's not fundamental in any way. There's already stocks under the hood, hospitalities, hotels, airlines, travel stuff, etc., which are getting a boost. But none of those are real heavyweight in the FTSE 100. That is all very much pharmaceuticals and commodities. So keep your eye on what's going on with those, really, to drive it here. So for the dollar, it's a bit of a mix for the FTSE because the dollar being weak helps the commodities. but obviously you will see strong sterling for inflows. That could add up. We have had this situation with outflows in the UK, 39 consecutive months or something stupid. Hopefully, we're about to move into a period where we get the opposite of that. So, a bit of sterling flow while the dollar's negative. You should get a double whammy on the FTSE side of things. Looks like it's all about can we get back above that 50-day moving average and hold it to get the next leg going. At the moment, it's really been ceiling for the last couple of weeks. The DAX obviously has been sidetracked, moving sideways because the whole European debacle with the French situation, which has gone markedly quiet for a few days. That is going to be the problem now, void of news flow politically for a few weeks because of the deals that are going to have to be done in the background as to who's going to support who and how they're going to get uh, their fiscal spending plans and taxation into line to hopefully get the bond market under control and a bit of confidence. I mean, good luck with that. It's a bit of a mess, but with it not being super negative, we're still in this situation for the DAX. It needs to put in at least one more high to put us even into a kind of leading, overlapping performance. I think we might actually need a bit more extension in this. I'm convinced about the subwaves, etc. There could be a lot more of this being a consolidation. We haven't taken out that low, which is what we wanted to be aware of, but the expanded flat is all about extreme. So yeah, and we need to see a decent proper breakout and get back into this long-term up channel to convince us that it's all moved around. Otherwise, we're continuing to put in the consolidation pattern sideways. So DAX, needs to take some leadership. Someone was suggesting earlier that it's their best setup for indices. Is it? I'm not convinced yet, and I love the DAX. I just want to see. I need to see those inflows come back in, and need to see a breakout. I don't think it's going to break out on its own without support from the US indices, which is coming to the end of the first 2 weeks, isn't it? Which we said is the most positive period of the year normally, and it's a bit mixed. So the next 2 weeks are normally positive, but not normally half of whatever the first two have been. Again, I'm slightly concerned, and we're going to look at it. We're very close to the next move up is a temporary top for the US before we get the 5% plus. So this, to me, feels like we're going to carry on consolidating for a bit. And where's my favourite Nikkei gone? Let's have a look at that. That's interesting. Remember, so in the preview this week, we said that the topics, which is the mid cap of Japan World, the one where Berkshire Hathaway are having it off, it put in its highest close, but it was way below those previous intraday close and intraday high levels. But now it looks like we're trading into that. Yes, we've wicked into that. You'd like to think at some point that gets taken out. At the moment, you're going to have a little bit of two-way pull because as the yen starts to become slightly lower, then obviously that's see profit taken in the heavyweight exporters, even though this index, which has more of the domestics in it, well, it's going to be bid. So we might have a period where topics outperforms the Nikkei, but the Nikkei itself has still been doing well. I haven't really looked at it for a few days. Let's have a look. So we had that beautiful move, and we were talking on Monday, weren't we, that this looked like we might just be consolidating this whole little bit here. And because it was a wave 3 that we got, it was either going to move from here or do a double, move from there. So that to me suggests very much that we put in the 5 there. So 2, 3, 4, 5. Okay, forgot what number we're on. Bear with me a minute. I'll be with you in a minute. I'm just double checking something I wrote a minute ago. So I was 2 below that. So that will be, yeah, okay. So that to me looks like we have finished wave 5 as well. Which is the 5-minute waves, which makes the whole thing the end of the third wave up. So the expectation from this means this is a wave 3 over here. So it's been quite a big move up, quite a run. Generally, we're looking for a 38, 20 fib pullback and to be around wave 4s of the lower degrees, which is all the way back down here at 36. I'm not quite sure we get there in the short term, but we might have some weakness that carrying on that we've seen here. That's already hit 2360. That to me suggests there's 5 waves there. You're going to consolidate and then potentially do another 5 zigzag, which means this 38, 20 fib is in play. Maybe this 40,000 level again could be caught up in that. But in general, we've put wave 4 here. We're not a million miles away there. So we're probably going to have a little bounce and then another sell off after that. And this means that we're pretty much in a decent uptrend. If the US happens to go into that 5% pullback, then we'll probably get a double extension of the sell-off, which brings this level down here back in as a long-term support. That is, again, that's going to be 5 to 7% kind of pullback. So keep those in mind. We've done really well on this drive up. We're very much at the end of a fifth within a third wave. That's quite toppy. So be careful. The Nikkei is overdue a bit of profit taking. What's this? Kwang Chu. How long have I been doing Elliott Wave? A long time, since the 90s. Do you play Elliott Wave? Cool. So this is the Dow, which obviously is going sideways, which is causing us a few issues with where the 3, 4, 5s are actually lining up. This needs to go to a new high, obviously, to put that in. We're rolling along the bottom of the trend channel. Not that impulsive, which is kind of suggesting that we're caught up in some kind of extension here, or have been. So this needs to start becoming more impulsive, or it's very likely to die. We may have to look at whether that is actually the 5 there and the 3 we're into this fourth wave, or whether it's going to go again. But it's not been the leading index, and it hasn't had the tech. It should be a beneficiary of rotating flows. It's got a lot more kind of industrials in it. Yeah, we're gonna have to. Unfortunately, this one's going to have to be the reactive index amongst the US while we see what goes on in the others. So it needs to take out this high over here, and it's already taken out the one in this. That does suggest that we are in the fifth wave of that, at least. So one. Yeah, all very, very messy, because that looks more like I'm going to have to change a few things there. Just kind of 1, 2, 3. I mean, that could have finished that, and we're into the consolidation potential. We are grinding up, but it's in no way is this the impulsive index at all. Hello, Bletchley. Nice to see you there. S&P, that is grinding up, as we know, on a weekly basis. It's still up this week. We had a doji, but didn't reverse there. But any of these highs at the moment are potential for this whole move to be done in the short space of things from all the way back in 22. There's an argument that which I never liked. There's an argument that all this here makes a 1, a 3, and then we're in the substructure here. But every time the bears try and call this, you get the substructure is wrong. So like the third wave here is on the verge of not being the biggest, which means that you're going to keep going higher after pullbacks. That's the thing that's been catching everyone out all the time. It's been trying to be bearish. So if we take that to there, so with that, if that's the third wave, then this current one needs to be below 13.4. Which again, it's already bigger than that. So that means that you just have to keep going back to this and looking for where the structure is kind of valid in the three ways. So within this, we've now got extension, which means there's at least one more pullback and one more high, because this could be one to here. Three wave consolidation is two. This whole thing here, when it's finally finished, is going to be the third wave. The only other way of it being still valid at the moment is for this to have been the fifth top, short fifth wave consolidation, and then we're now into a new upward structure. But at the moment, we're kind of expecting the whole thing to be topping out. So that's telling you we're going to have a little bit more churning before it finally gives up. What's it look like at the lower time frames? Yes, before anyone says it is a messy chart, I know. But, well, we were at the highs, but the volume profile is absolutely shocking, never mind the internals. But we have been looking, wanting, this is kind of key for medium-term bullishness. The number of stocks trading above 50-day moving average is off the lows, and he's on the verge of making a higher high for the recovery. This was where we were really impulsive. It was trading around, that's 50 plus whatever this number is, like 80%. We're trading above the 50-day moving average. We're now back at the sort of 60 level, getting healthier. Look at this one down here, the one where everyone was trying to get bearish into this consolidation, was when the stocks trading above 200-day moving average was collapsing. We're now improving, starting to improve on a daily basis, the 200 days. And that is because we've had that breadth of S&P stocks. Like yesterday, we had 400 were up. So now we've been coming back. These are all signs that the internals are good, which means that the likely consolidation that we're about to see is shallow. It's not complete, which is in line with how we've got it labeled. We're expecting this to be the end of the third wave, which puts in a fourth wave somewhere inside this fourth wave and this fourth wave. So it'd be a decent pullback. I'm hazarding a guess that'll be my first stop. Might even be where it does a halfway stop. But when we top out and get into some serious proper consolidation, bigger sell-offs of the heavyweight, then we could easily come off 500 points. And that is not negative, but you know, in the way that we have been trading, and you can see this is where a lot of the volume was as well previously. Perhaps we just enter into that as a consolidation, in which case we're looking at, by the time this is topped, 4 or 5%, and then we've got one more high to come. So this is why my overall bullish thing has always been 3, 4, 5s until we finally top out. Once we hit that 3, 4, 5, we've got a decent sell-off coming. And that should be at the end of, we've still got it lined up with the end of our August seasonality. Late August, early September is generally a sell-off period. So we're going to put a new high, consolidate, put in another all-time high, and then sell. So that's good for trading. That's good trading ranges if we're playing at the right end. So if you're buying here, there's not that much upside left in the short term. But down here, it's definitely a buy into whatever the next pullback is. So keep that in mind. It's when we get to this one, the second time we take out this level we're at the moment, is when we should be concerned. So definitely that is the idea. The Fed on the brink of cutting rates, will it move more money into stocks? Well, we should see that, but they're also going to have people moving down the curve in bonds because you get this gearing effect. They call it duration. The longer the time period of the cash flows, the more the price of the bond moves. So you get a double whammy. You get people coming out into stocks, and you get people coming along the yield curve. Because even though the differences in interest rates absolutely won't look like much, it's the compounding effect of the future cash flows where all the benefit is. So that's why you get support on the 10-year yield, and that's why people follow the 10-year yield so much, because it's a good sign of what's going on. That would make that yield come down, which again is supportive to the whole valuation of stocks, and you get this double whammy circular argument as to why the strength keeps coming. And it's also going to be a good thing to get the rates down once we start to help the people on lower incomes and take away a bit of the excess money. They'll have to start putting it to work, investing it elsewhere rather than just sitting there. The middle income and higher income people just sitting picking up 5% to 7% for doing nothing. They'll have to actually put some risk on board to make those kind of returns. That is overall healthy. It's not good to have high short rates. So that is good. That is playing out like we talked about in the preview. This whole halitosis breadth coming through. Are the numbers going to improve under the hood? But yet we go sideways. I personally would like to see us. We've just said on the weekly, it looks a bit messy, but you think can make an argument within here that we've got a bigger middle wave of the 5 swings there. You could top out right now. Might be useful. As this is a subwave. It's got two big bullish phases. I mean, not necessarily a big one here. So that I'd like to see that put in just this little eked out high that we're talking about, and then I would actually really like to see a sell off just to confirm that we're in the right pattern. In which case, medium term, I'm still bullish. And then Nasdaq is the last one, isn't it? To look at. Where are we there? So these all had the same idea. Again, looking at those from the October 22 low, 52% move up, consolidation, 31% move up, consolidation. So in that realms of the middle wave, which is normally the strongest, doesn't become the shortest. That would mean absolutely we'd keep going to ultimate highs. We've got a little bit to play with for this 5th wave at the moment. 31.5% is right up here at 22,300. I think we get there at some point, but we might be very close to topping out, as we've talked about with the S&P. Again, it's all about the substructure here, and that looks like 1, 2, and then we've got 5 waves to this high at the moment. So we might just eke out one more high again here before that goes into a consolidation, which takes us back into either this here being a 4th wave, 19.5, to ultimately, if something went really wrong, 17,000. Basically, be somewhere, I reckon, between 18 and 19,000 would be a likely stopping point. Somewhere around here, the ultimate pullback, because we want to go. We've got one more higher degree 5th wave to get in there. On the hourly basis, so I think that is the 2. 1, 2, 3, 4, 1. Yeah, I mean that could easily be, that is a valid end that we've already got in there on the Nasdaq. So, and because we've come so deep within that substructure, and we don't really want to come into here, although it is valid as a fifth wave, you can get overlapping because that is the ending diagonal scenario. So yeah, that doesn't necessarily have to be the case there. This could do a double we're talking about. So once this rally starts, we could put in the same depth, which takes us back into wave 2 area and below the height of wave 1. That is valid to then put another high in, but we'll see how it relatively plays with the S&P over the next few days. At the moment, to me, that's a not play. It's too much in the middle of either putting in a new high there or putting in the low below it on a double basis. I'd like to get closer to either extreme before we decide how to play that. You may want to do something else. So yeah, but actually, I just said that's that blue line there, which is the end of the wave. What will be the wave 4 of 2 degrees lower, and 1 degree lower is even further down. Just what we said. So that sort of 19.5 to 19 is where the eventual comes. It's where we put the 4 in previously. It's just a case of whether we've actually finished these 2 5s here, the 5th to the 5th. This could still be a sub-level 4 wave playing out before it has its own 5 bracket, double brackets, Roman numerals. It's the minute waves. So at the moment, indifferent. I want to see a bit more action either way, a little bit more fundamentals on the Nasdaq, and it is a little bit confused on the inner machinations. So I'll wait for more on that. No trade for me. You may have a different idea. Any more questions on any of that? I know I've gone on a little bit, but hopefully that was useful. Everyone still all right with all the fundamentals? So to me, it's just like be careful with the longs. Make sure you're stop lost. I don't think if these are going to highs at the moment, I still think it's not that much more to go. I'm not going to start moving what we've had in there for months, basically, and it's played out to the levels we've suggested. Let's not change our view until there's reason to. So very close to having a trading short on some of these US indices, looking to pick up for one more trade up, and then towards the end of August, that should be the end of that sort of 3, 4, 5 formation we're playing, and then we'll have a look at just where we are. But look out for the dollar again. 104 breaks, then you will have some short-term upside in indices. But again, it all depends how that plays out. But we've been talking on my chat today. Some of the best trades are when you're not trading. We've just gone through a lot of the positions. The UJs could go either way at the moment. The indices, the dollar could go either way, subject to how it trades. EU and GU both grinding towards some consolidation ahead, but all part of higher breakouts. But it pays to wait. If you've got the opportunity of being patient, there are some good setups just ahead. I just think we're in a bit of a noisy period. So hopefully that isn't a cop-out for a lot of you, but sometimes you just have to say it as it is. Hopefully you're profitable this week and beyond, and come and speak to me on my chat. But if not, we'll see you on Monday. Take care. Come on, England. All the way.